Hi there, you're watching Market Cafe on ET Now with me, Shreyansi Singh and Priyanka Uppal. And over the next 1 hour, we'll get you news and updates from within the country as well as across the globe. Also tell you which stocks you should be watching out for and tell you what the brokerages are saying as well. Well, first things first, let's take a look at what the US markets then did. And quite a good day coming in for S&P.
Morning, Shreyansi. There was just a moderate increase in CPI, but the reaction of the traders were very huge. You saw one of the best day of the November in terms of the moves that came in all three indices. In fact, let's get you what exactly happened. Now, Dow surged around about 700 points, nearly 1.65%. S&P 500 rallied 1.83%. This is all on the back of that there are signs of inflation cooling off, the kind of CPI print which came in. And before that, PPI also came in softer. So there is again the expectation that Fed could cut the rate cuts, which actually went off the table with the last economic data which came in, the strong jobs report data last week what came in. Nasdaq also outperformed, advancing 2.5%. Remember now the earnings trigger is also a big caveat for US markets also. There was just a moderate increase, but the reaction was huge, not just in equities, even the bond market. 10 years US Treasury yield, that one also pulled back sharply, and now it's trading at 4.65%. Remember, it went through an elevated level, which was its 14-month high also. So cool, equity markets reacted, they surged. Bond yield cooled off, dollar weakened, and of course gold also reacted. So altogether, with this economic indicator, the scenario seems that we are back to risk on rally. In fact, Bitcoin also reacted to it. Now, there are key earnings. Of course, on the back of tech stocks, we did see a lot other part of the speculative market also. But then Tesla, Nvidia, that one especially spiked. Bitcoin topped again $1 lakh. And now, of course, a lot of banks have to report numbers. And also, there is one more key economic data which is on the tab. That is a retail sales data that is expected to, however, increase by 0.5%, lesser than what is the market participants are penciling in. That is a key economic data to watch out. But at the moment, looks like a risk on rallies there.
Well, absolutely. So a risk on rally is what you're looking at. But then when you shift focus and take a look at oil prices, you're looking at a rise of more than 2% coming in, supported by a large draw in US crude stockpiles, the 8th draw in fact, and potential supply disruptions as well caused by new US sanctions on Moscow is something that we were also looking at. You do have a Gaza ceasefire deal that is limiting gains at this point. But even with that in place, you do have Brent crude futures that were up 2.5%. Around $81 per barrel is where Brent crude was at. Even when you take a look at US WTI, you're looking at a rise of over 3% coming in. As far as WTI is also concerned, $79 per barrel is the kind of level that you have at hand when you look at US WTI then. And US crude oil inventories did fall last week to their lowest level since 2022 as exports rose and imports also fell. And this is according to the EIA. So that is largely the kind of US stockpile picture that you have. But let's keep it going with oil. In fact, OPEC has gone ahead and forecasted oil demand for 2026 to be same as this year, while also reducing its figure for 2024 for a 6th time following economic weakness in Beijing as well. Now, the 2026 forecast is in line with the OPEC exporting countries' view that oil use will be rising over the next 2 decades, but in contrast to the West's International Energy Agency that predicts it will peak this decade as the world shifts to cleaner energy. So that is the kind of forecast that you have as far as oil is concerned. In fact, in a monthly report, you did have OPEC saying that the demand is going to be rising by 1.43 million barrels per day in 2026, a similar rate to the growth of 1.45 million barrels per day that is being penciled in as far as this year is also concerned. So that largely is the kind of picture that we're penciling in as far as oil prices are concerned then.
All right, then let's get you the update on Bitcoin as well as gold. Now, the spot gold, that gained near about 0.6% to $2,693 per ounce. In fact, US gold future also settled 1.3% higher. And not just the gold, it's even the Bitcoin that extended its rebound on Wednesday. Now, it's hovering at $1 lakh, of course, after this encouraging inflation report. But then the risk-on sentiment is not just only in equities, but also has come back to it. Bitcoin, which was actually down last few weeks. It was actually, we've seen a kind of surge. After that, it cooled off a little. But then looks like we are back on track for a surge again now.
Well, absolutely touching that $100,000 level again. It's not a small feat, definitely coming in for Bitcoin, and it looks like there could be higher highs in store for Bitcoin even after Trump gets the keys to the Oval Office, because he's been talking about a different regulation system altogether as far as crypto is concerned. But with that, let's also keep it going with some more news and updates. For now, let's take a look at the events that you should be keeping on your radar. From the US, you do have initial jobless claims as well as retail sales data. And from the UK, then there's industrial production data. In fact, from Japan, there's also PPI data that you should be looking at. And let's also shift focus then to global earnings. We've been talking about this earlier as well. Bank of America, Morgan Stanley, TSMC, those are the ones to watch out for. And back home, then you do have Infosys, Axis Bank, as well as heavyweight Reliance that is going to be reporting its numbers. So do keep an eye on all three of these counters. Last day to buy shares to be eligible for interim and special dividend when it comes to TCS. So keep an eye on that one as well. And there's, of course, HCL Tech that you should be looking at for the same reason as well. Last day to buy shares to be eligible for interim dividend for HCL Tech. So that's also the one to watch out for, Priyanka.
Some interesting visuals coming in, but then of course there are a lot of action what we see from the global markets also. 15-month war is coming to an end. Actually, let's get you the entire story. Israel and Hamas have finally reached a landmark, and that this morning it's an optimistic story. They've reached a landmark agreement to cease hostilities in Gaza and exchange Israeli hostages for Palestinian prisoners. This breakthrough comes after months of intense negotiations, which was facilitated by Egyptian as well as Qatari mediators with the support of the United States. The deal is particularly significant given its timing just ahead of the January 20th inauguration of US President-elect Donald Trump. Now, the conflict between Israel and Hamas has been devastating, with Israeli troops invading Gaza after Hamas-led gunmen breached security barriers, killing 1,200 soldiers and even civilians, and abducting over 250 hostages. Now, on humanitarian toll has been staggering, with more than 46,000 people killed so far, hundreds of thousands displaced, struggling to survive in makeshift shelters. The agreement is seen as a crucial step towards ending the 15-month war that has ravaged the Middle East. President-elect Trump has been vocal about his desire for a swift resolution, warning of severe consequences if the hostages were not released. His Middle East envoy, Steve Witkoff, worked closely with President Joe Biden's team to facilitate the deal. The deal marks a significant shift now in the dynamics of the conflict, coming after Israel's successful assassinations of top Hamas and Hezbollah leaders. As the region awaits the implementation of the agreement, hopes are high that his breakthrough will pave the way for a lasting peace. Let's go across and listen in what Joe Biden had to say on this.
Because at long last, I can announce a ceasefire and a hostage deal has been reached between Israel and Hamas. For more than 15 months of conflict that began with Hezbollah's brutal massacre on October the 7th, more than 15 months of terror for the hostages, their families, the Israeli people, more than 15 months of suffering by the innocent people of Gaza. Fighting in Gaza will stop, and soon the hostages will return home to their families. The elements of this deal were what I laid out in detail this past May, which was embraced by countries around the world and endorsed overwhelmingly by the UN Security Council. The deal is structured in 3 phases. Phase 1 will last 6 weeks. It includes a full and complete ceasefire, withdrawal of Israeli forces from all the populated areas of Gaza, and the release of a number of hostages held by Hamas, including women and elderly and the wounded.
Alright, then all eyes are definitely going to be on that Israel-Hamas ceasefire deal as well. But on to the biggest talking point for market participants this morning, then the December consumer price index that witnessed a seasonally adjusted 0.4% rise coming in, putting the 12-month inflation rate at 2.9%. Now the street was estimating just respective readings of 0.3% and 2.9%. Then excluding food and energy, the core CPI annual rate was 3.2%, a notch down from the month before, and slightly better when you compare it with the 3.3% forecast as well. Now the core measure rose 0.2% on a monthly basis, and also 0.1 percentage point less than expected. Now much of the move higher in the CPI came from a 2.6% gain in energy prices for the month, pushed higher by a 4.4% surge in gasoline. That was also responsible for 40% of the index's gain. Now the data, of course, pointing to an inflation trend that lines up with the Federal Reserve's view for a slower path of rate cuts this year. Let's also keep it going with some commentary then. How is the latest inflation print likely to impact Fed's rate cut stance? Can investors then expect the Fed to hit pause on rate cuts? And additionally, how can we expect global and emerging markets to then perform in the medium term? Let's also go across and listen into the view coming in from markets commentator Geoff Dennis, who gave us his opinion about the same. Listen into what he then had to say.
Inflation is indeed stabilizing, but it's stabilizing above the Fed's target of 2%, stabilizing around 3%. And so I don't think anything we've had here in the CPI report makes it any easier for the Fed to consider rate cuts at the moment. And the most recent dot plot from December is 2 interest rate cuts in 2025. And when I wrote my own outlook for emerging markets in 2025 about a week ago, I talked about 2 rate cuts in 2025 also. I think to get to 2 rate cuts this year will be very difficult. I think the call has got to be now somewhere between 0 and 2, and I would not be at all surprised if the Fed decides to keep rates on hold all year, unless that is the economy slows dramatically, which at the moment it doesn't look as if it's going to do.
All right, moving on. The optimism that got fueled into U.S. market was partly because of the CPI and also on the back of the strong earnings which are being reported by the banks so far. Many of the banks which reported earnings have beaten the estimates, posting higher profits. For example, JP Morgan's profit is up by 50% to $14 billion, and net interest income that came in around $94 billion. Wells Fargo net interest income is at $11.84 billion versus estimate of $11.7 billion. Meanwhile, Citigroup's revenue also reported higher, $1.24 billion versus the estimate of $1.51 billion. So earnings is also what is keeping with the pace.
Alright, then moving on, shifting focus then to TikTok. TikTok is preparing to potentially make the app unavailable to its 170 million American users on Sunday, the same day a US ban is set to go into effect. Now, a law signed by US President Joe Biden in April requires TikTok to divest from its Chinese ownership and sell to a US company, or it will be shut down if the Supreme Court declares the law unconstitutional. Before then, TikTok can continue to exist as it is today. According to reports, President-elect Donald Trump, whose term begins a day after a ban would start, is considering issuing an executive order to suspend enforcement of a shutdown for 60 to 90 days. So the clock is definitely ticking for TikTok.
Moving on, what comes across as a shocking news is that Hindenburg Research, Nate Anderson, the man who made his name with campaigns targeting billionaires like Gautam Adani, Jog Dorsey, and even Carl Icahn, said he's disbanding his small but renowned firm. Anderson cited the toll of the rather intense and at times all-encompassing nature of the work as the reason for his decision in a website post published on Wednesday.
Alright, then that was your daily dose of news and updates, at least on the global front. Then time for a very quick breather in the show. When we come back, we'll take a look at how the Asian markets are faring. So don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, as promised, let's get your check going on the Asian markets. And then firstly, when you take a look at South Korea's Kospi, that was previously up over 1% after the announcement of Korea's central bank surprising the central the market watchers, in fact, by keeping benchmark rates unchanged at 3%. Currently, it is in the red on your screens. 0.6% downtick coming in. As far as South Korea's Kospi is concerned, let's also shift focus. Take a look at Japan's Nikkei, because that is the one that is holding on to a shade of green at this point. 0.5% uptick coming in as far as Nikkei is concerned. And even when you take a look at Hong Kong's Hang Seng or Shanghai as well, you do have Hong Kong's Hang Seng holding on to 1.9% of an uptick thereabout. And when you take a look at Shanghai as well, almost 1% is the kind of gain that you're looking at as far as Shanghai is also concerned on your screens. When you take a look at ASX 200, that is the one that is up about 1.4% as well. So great handover is what you're looking at as far as Asia is concerned, barring Kospi that is languishing in the red just a tad bit at this point. But when you take a look at the other indices, the likes of Nikkei, Hong Kong's Hang Seng, as well as Shanghai, and even ASX, the top gainer at this point amongst all of these indices, you do have a good handover coming in now. Yesterday, of course, we closed around the 23,200 mark. And currently, what is being penciled in is a gap up start. That's what you're looking at. Yesterday, of course, realty and a resilient IT sector is what you saw propping up the markets. But for today, there is a great handover that we have at hand, Priyanka.
Absolutely. So looks like good sort of cues coming in from not just from US market, even from the Asian markets. But now let's understand, what do we have in store for you? Going further, we have an action-packed lineup for you. At 9:20, we gauge what is Sami Arora reading out of the FPI's sell-off so far at 9:20. At 9:30, we keep it with the earnings. We would have Arnab Banerjee, MD and CEO for CS Limited, joining us. CS did show improvement. In fact, the domestic volumes also grew. Replacement market looks strong, but what is the growth map going ahead? Let's understand that. At 9:40, we would have Amit Chadda, CEO and MD from LTTS, to talk about the earnings reported so far and the growth map going ahead. 9:50, we speak to Amisha Vora, Chairperson and MD for Prabdas Leeladhar. At 10 a.m., we would have Prabal Sen joining in, VP Equity Research from ICICI Securities, to help us understand what should one pencil in as far as Reliance results are concerned. Reliance has to report numbers on Friday after the market hours. Let's see if there is a growth, because sequentially what we saw last quarter was not that encouraging, and in fact in all segments we did not see that encouraging numbers. But let's see what is Street penciling in for this quarter. And then to understand the consumption trends, Avnish Roy would join us, Executive Director from Nuvama Institutional Equities, at 10:20.
Alright, then that's a power-packed lineup for you right there.
Welcome back. You're tuned into Market Cafe on ET Now. This is Priyanka along with Shansi. Let's understand the other stories. To ease liquidity tightness in the banking system, RBI has decided to conduct daily variable rate repo auctions. Now, this could also neutralize the liquidity draining effect of RBI's forex market intervention and soften bond yields. Ankur Mishra joins in on the phone line to help us understand that. Ankur, a lot is expected from RBI at this point in time, especially with the kind of fall we've seen in rupee, and of course the what is RBI's stance could be for the upcoming policy. Help us understand how crucial is this step.
Yes, the overnight repo rate is back into play from today, as in a significant move, Reserve Bank of India has decided to conduct a variable repo rate from today, and the auction has been decided between 10 to 10:30 a.m. And this will happen every day without fail till the time next step is decided by Reserve Bank of India. For today's auction, the amount which is decided is rupees 50,000 crore. Remember, the system liquidity was in deficit of around 2 lakh crore, and this has been ongoing since January 9. And last we understood that on February 14, the liquidity deficit was 2,09,000 crore, and hence this kind of step has been taken by Reserve Bank of India. Now, this is also important because you remember that in the last policy there was a CRR cut of 50 basis point, considering the fact that there will be liquidity deficit in the system. But despite that, Reserve Bank of India has to take some other steps, and hence we have seen that daily VRR auctions are going to be conducted from today.
Thanks, Ankur, for getting us all of those details. Thank you so much for joining us bright and early this morning. But moving on then, ET now learns from its sources that DFS Secretary has recently chaired a meeting with the top bosses of PSU banks to get a check on the schemes made under financial inclusion. Let's go across to Prakash, who's standing by with more details on this. Prakash, over to you.
Yeah, the DFS Secretary's meeting with the heads of the public sector banks has concluded, where various issues have been discussed. The meeting was also attended by some financial institutions such as SIDBI and Mudra Limited, among others. Sources are indicating that the DFS Secretary has reviewed progress made under various financial inclusion schemes such as Mudra Yojana Stand Up India scheme along with PM Swanidhi Yojana. This meeting was very crucial in the context of forthcoming union budget, where future funding requirements of these flagship schemes were discussed and necessary decision would be taken. Along with that, the sources have also informed that the DFS Secretary has discussed the issue with regard to credit growth to the sunrise sectors with the banks and financial institutions, and necessary instructions have been given. The issues related to the augmentation of banking infrastructure were part of the discussion, where instructions have been given to deploy business correspondent to cover all inhabited villages. In addition to that, sanitization of data on the JDD app and implementation of geo-tagging of all business agents were part of the discussions, and banks and the financial institutions have been instructed to take necessary steps to meet the target which was already discussed in the meeting.
All right, thanks very much, Prakash, for helping us understand the crucial events which took place at this meeting with PSPs. Moving on, MotoCorp is targeting continued dominance in the entry as well as deluxe segment. That's the word coming in from CEO Niranjan Gupta. In an exclusive conversation with ET Now's Sumit Chaturvedi, he spoke on the much-awaited revival in the rural economy. Listen into what all he said.
If you look at 125cc, absolutely. We had lost market shares over the last 5-7 years in 125cc. We've come back very strongly through Extreme 125. From the moment of its launch, from market shares of 14%, we are now at 21%. So we've gained 700 basis point shares on the back of Extreme 125cc, which we launched. Fantastic product, received very well. In fact, in that segment, Super Splendor and Glamour have also started doing well. So I think that's the story of 125cc. As far as rural challenge is concerned, the rural challenge was more around post-COVID, where the confidence in consumption had gone down, the health cost had gone up, there were unemployment problems. I think we can see that rural is starting to come back because the benefit of the government's schemes and the capex investments are probably starting to come around. There have been good monsoon, the crop cycle have been good. We can see rural coming back. As it comes back even stronger in the next few quarters, then we will see the entry segment bouncing back in a big way. And more products that are going to get launched will have that. Portfolio, we are well on our way to actually create one of the strongest portfolio in premium. We already have launched and have 5 brands under it. Extreme, Xpulse, Charisma, Maverick, and Harley-Davidson X440. You will see on these brands more launches happening in Bharat Mobility. So I would say that we are well on our way to have one of the very strong portfolio in the premium. That's the other P part of it. On the place part of it, you yourself said premium. So the new premium stores, we've crossed 60. I think in the next 6 months, we should be crossing 100, and the journey of new premium stores will continue. While overall our market share may be 5%, which itself is a big move up from where we were, there are many cities which have crossed 10%, and there are cities where we have crossed 20% market share.
Talk about the global business, Colombia, Philippines, Bangladesh. What is happening over there?
Oh, it's coming back. In fact, the last 9 months, our global business have grown by 40%. It's probably one of the highest growths that we have registered, and it's probably twice that of industry. We've gained market share there. Bangladesh operations have started coming back. Colombia started scaling up. We see some good traction in Mexico that started happening. We have changed distributor in Nepal. We already announced a foray into Brazil. We've commenced operation in the Philippines in a small way. So you can see a lot of action on the global front.
Alright, then that's the word coming in from the top boss at Hero MotoCorp. But moving on then onto a source-based story, the government will be taking a final call on ethanol price hike. In fact, sources tell your channel that the Union Cabinet will likely consider the proposal, and ethanol produced from B-heavy molasses and sugarcane may also be increased. We do have Prakash Priyadarshi joining us again with those details as well. Prakash, tell us a little more about what your sources are telling you then.
Yes, an important development coming in as we are learning from our sources that the government is likely to take the final call on ethanol price hike proposal. We're given to understand that the Union Cabinet may consider the proposal prepared by the Ministry of Petroleum and Natural Gas, and significant changes are likely to be made. Sources are indicating that the price of ethanol produced from B-heavy molasses is likely to be increased by approximately Rs 2 per litre. When it comes to a price of ethanol produced from sugarcane juice, that is likely to be hiked by Rs 1.5 per litre. But when it comes to price of ethanol produced from C-heavy molasses, sources are indicating that the Indian Cabinet may regularize the incentives provided by oil marketing companies for ethanol produced from C-heavy molasses. As you are aware, that the oil marketing companies had made an announcement to provide Rs 6.87 per litre incentives for ethanol produced from C-heavy molasses for ethanol supply at 2020-24, which is not into effect now. But Union Cabinet may regularize this incentive plan for the ethanol supply year 2024-25. A very significant development coming in. Technically, there is a hike of Rs 6.87 per litre when it comes to ethanol prices produced from C-heavy molasses, but effectively there is no change in prices when it comes to ethanol produced from C-heavy molasses as compared to ethanol supply at 2023-24. Also, the government is confident to achieve 20% ethanol blending target before the deadline, which is up to financial year 2026. In fact, the government will require approx 1,016 crore litres of ethanol to meet 20% ethanol blending target, which is already crossed 60% by December 2024.
All right, thanks very much, Prakash, for that exclusive detail. Let's see how this reacts, because, of course, the regularization of incentives for OMC's stocks will react on this news for sure. Thanks very much. Keep an eye on this crucial piece of news. But moving on, let's get you some more key news from the hospitality sector. The hospitality sector has been a huge job creator from the Indian economy, with Mahakumbh being the latest and most robust example. And IHCL's top boss, Puneet Chhatwal, shares the sentiment. He also called for key policy changes to aid the sector's growth. Here's what he said.
It is a multiplicator because a lot of people behind the scenes are working together to create an event that we are all celebrating jointly. And whether it is your Shikarawala on the Dal Lake, or it's the Rikshawala in Kashi Vishwanath temple, or look at just now the Kumbh, the Mahakumbh, all that would be happening is very, very relevant in terms of creating jobs. The government spent on infrastructure is fantastic. The biggest beneficiary is tourism and hospitality for building of new airports, building of new highways, building of, the renaissance of the train stations, etc. So I think this would encourage investment. It would encourage institutional capital coming into the country, even from foreign sources, to propel growth of hotels and other infrastructures. And the second is to have industry status at all state levels. Industry status helps the sector to be more competitive. And obviously, third, we need something to market. We are lagging behind on the foreign tourist arrivals.
Alright, then that's the word coming in from IHCL's top boss. Time for a very quick breather on the show. When we come back, we'll get you more news and updates, so don't go anywhere. Welcome back. Thank you so much for staying tuned in. Time now to get to the futures and options roundup then, and Ansh is standing by with just that. Ansh, over to you.
So let's start with Nifty first. As you can see in the chart as well, Nifty has been advancing for second consecutive session. However, it has been taking strong resistance around that November lows of 23,250 mark from last 3 consecutive sessions. So unless until we don't give a decisive breakout from this level and close above it, we can have some sideways action here. If we talk about index option, then we are seeing most active call writing happening at that 23,300 strike, indicating a resistance around this level. Now, if you talk about Nifty Bank, the Nifty Bank actually closed within its previous session range only. So here also we are seeing consolidation happening. And if you talk about index future, then we are seeing open interest has gone down by around 1.6%, indicating long unwinding. Now, if you talk about FII, then in index future in the previous session, they have added some long by around 2,800 contract. They have trimmed the short as well by around 1,700 contract, due to which we are seeing net addition of around 4,600 contract on upside, due to which the total long position has inched higher from 16.2% directly to 17.2%. So here we are getting that they are getting a bit bullish here.
All right, that's interesting that at least the outlook seems to be changing from FIs on the long side. Thanks very much, Ancha, for that quick round update. Moving on, let's get you all the stocks that could be buzzing in trade today on the back of the earnings as well as the brokerage notes. Priya is standing by with the whole list of stocks. Priya, good morning.
Yes, good morning, Priyanka. Let's take a look at the stocks that are going to be in focus today. We have a lot of stocks in focus on the back of the Q3 numbers. First up is Punjab and Sindh Bank reporting quite a good set of numbers. The net interest income has gone up by around 27% on a year-on-year basis, and the net profit has gone up by 147% over the previous year. The GNPAs are down around 4.2% sequentially, and net NPAs are also down 9.7% sequentially. There's also L&T Technology. They have reported revenues going up around 3.1% on a sequential basis. Net profit is largely flat, up just about 0.9% on a quarter-on-quarter basis. The EBIT has gone up around 8.8%, and the margins have gone up around 83 basis points, coming in at just about 15.9% in this quarter. We also have CEAT reporting their Q3 numbers. The revenue has gone up around 11.4%, but if you look at the net profit, that is down 44.2% on a year-on-year basis. Even the EBITDA is has declined by 18.3%, coming in at 341 crores in this quarter, and the margins have also declined significantly, down 376 basis points, coming in at just about 10.3% in this quarter versus 14.1% in this quarter last year. Further, there's also some other news flow on CEAT. The company has proposed a capex at the company's plant situated in Nagpur. They have proposed an investment of rupees 400 crores for a capacity addition by 30%. There's also Oracle Financial Services reporting their Q3 numbers. Revenue has gone up around 2.5% sequentially, but the net profit is down 6.4%, coming in at 541 crores in this quarter. EBIT is also down around 5%, and the margins have also gone down by 320 basis points in this quarter. But shifting focus from earnings, there are some other stocks in focus. RVNL will be in focus since they have received an LOA worth rupees 3,622 crores from Bharat Sanchar Nigam, and Happiest Mind Technologies will also be in focus today since they have collaborated with Coca-Cola Beverages in Vietnam to deploy an innovative Gen AI conversational interface. So keep your eye out on all of these stocks today.
Absolutely, Riya. Thanks for getting us that roundup. So that's the list of stocks to watch out for. But the one to add to this list is very important, which is Big Boy Reliance. That is also all set to report its Q3 earnings. In fact, we do have Varun who's standing by with exactly what the street is penciling in. Varun, looks like a good Q3 in store. Tell us a little bit more about the kind of expectations that we then have.
Well, so we are expecting decent set of results from Reliance Industries, wherein the revenues and EBITDA is expected to grow by around 4.6 to 4.7%. The profit is expected to grow by around 10.7%, and it will reach around 18,337 crore rupees. The margins, if you see, we are expecting a 30 basis point increase in the overall margins. The margins will increase from 16.9% to around 17.2%. The overall results would be supported by the Jio business, wherein we are expecting the ARPUs to show an increase of around 5 to 6%, and the ARPUs will reach above the 200 mark for the first time. We are expecting the ARPUs to reach from 195 to now 206 rupees. Also, for the other business, if you look at the oil business, the oil to chemical business is expected to show weaker performance. The petchem business is expected to show weaker performance. The refining business, although, will show some better performance. If you see in this quarter, On a quarter-on-quarter basis, the Singapore GRMs were up by around 38%. So that would be reflected in the overall GRMs of Reliance Industries as well. When it comes to the retail business is expected to show muted growth. On a year-on-year basis, if you look, the growth would be around, it would be flat or it would be around 1% only. So if you look at the overall results, the results would be decent. It would be supported by the Jio business, wherein the ARPUs would be crossing the 200 levels for the first time.
Varun, scenario looks the same only. Muted set of growth could be penciling in from retail, petrochem weak. It's only the Jio, the telecom business, which can hold on to the gains. Thanks very much. With this, it's a wrap. Give Nifty indicate a positive start. Let's see, with the support of global cues, let's see, are we in for a higher session? It's a wrap. Stay tuned to it now for more updates.
If you like this video, then like, share and subscribe to ET Now.